Good afternoon, everybody. Everybody get their third, fourth, 10th coffee of the day? Ready to go? My name is Trevor Hall. I'm the host of Mining Stock Daily podcast, and I'm happy to, Kai asked me to moderate this panel discussion, and I have to admit, I about laughed out loud when he gave me the topic, tax loss season, because I think tax loss season started January 1st, 2022. So I'm happy to welcome in both Douwe van Hees, fund manager of Plethora Private Equity, and Eric Strand, CEO of AuAg Funds. And I will let each one give a brief introduction.
I'm Douwe van Hees. We run two exploration-focused funds out of the Netherlands, one being Plethora Private Equity, and the other fund is Plethora Precious Metals, solely focused on grassroots exploration.
So, Eric Strand, CEO and founder of AuAg Funds. We are an active manager running two UCITS funds available in Germany for non-professional investors and professional investors, of course, as well. And we also have one exchange-traded ETF, the most modern ETF, I would say, for gold miners.
Thank you. This will be, if there are any questions toward the end, please hold them. Raise your hand and we'll see if we can have an open conversation through all this if you have a specific question. Quick reminder of what is tax loss selling. It's selling investments that have decreased in value to create a loss, which can then be used to offset capital gains. So if you were the fortunate ones to invest in energy, Twitter, or an antique stamp collection and needed to sell something like your junior mining stocks to offset those gains, that's what we're talking about. But we are getting into the seasonality of tax loss season. We are seeing, well, lots of the equities in the junior mining space incredibly, I guess safe to say, undervalued. But the question is this the opportunity we're looking for right now, or are we still looking at potentially catching a falling knife? And Eric, I'll leave that question to you right now,
okay,
generally
thanks.
speaking.
First of all, I'm not very afraid of falling knives. I've been a fencer for almost all of my life, or half of my life, and doing a lot of competitions, world championships, and also Deutsche Vizemeister in Mannschaft, zweimal. But of course, this is an event like index rebalancing is also an event, and you see a lot of front running before these events. And for me, like the speaker we had before would wait maybe after tax loss to see what's happening, and also divide it in two different types of tax loss selling. Because some companies have really performed really bad because they have done a bad job. And to buy these stocks, I don't know. But the stocks that maybe have been okay but have lost value due to every company losing value, they could be interesting. So I would divide the different stocks into different types. And then I would also wait, because a lot of shorts, they want to gain on the tax loss selling, front running the tax loss selling. When they are happy enough, when they want to cover their short positions, that would maybe be the time to buy if you want to buy. But I would still divide the companies, not to buy the really bad ones because they will probably need to raise capital soon, and then you will lose money if you buy too early.
Well, we are in a sliding market since April, and in our view, tax loss selling really came about in September of this year. To call it an opportunity, well, the entire market is undervalued currently, so you have cheaper and cheap. And in terms of liquidity, it's difficult to actually build significant positions currently in the market or decrease positions in the market.
I mentioned the seasonality of tax loss. The sector, we do see these seasons within the year. And I know at the beginning of the year, oftentimes people that play the seasonality in the precious metal junior equities will typically go in and buy after tax loss selling, expecting a little bit of a bounce early months of the year. A lot of people tried that and were underwater pretty quickly, and obviously we continue to see a cascading effect from there. So let me ask you about seasonality. In the macro environment that we're currently in globally, Is seasonality in this sector thrown out the window?
Well, currently you have two forces against each other. You have, on the other hand, on one hand, you have tax loss selling going on, and on the other hand, you have, well, since a couple of weeks, increasing commodity prices. So that made more, more liquidity came into the market, but prices didn't really increase on the junior exploration sector per se, because a lot of people are taking the opportunity to sell down their positions and taking advantage of the tax loss selling.
Mm-hmm. Do you have anything else?
Well, I think the sector is so interesting and so cheap, so I wouldn't like to sell anything. I would like just to buy, because I mean we are going into a great macro environment for gold and silver miners. So even if I had a loss, I wouldn't sell actually myself.
Eric, were you encouraged 2 weeks ago? The gold chart had the breakout out of its downtrend late, obviously in November during the season. Is that a technical sign for you to deploy capital after that chart?
No, because we are long only, so we don't go for technical issues. Or I mean, that's a prophecy for itself. So for us, it's being long only. We love the sector, we love the case, and we are fully invested. So the seasonality and this short-term trading is actually not what we do.
How does private equity play this?
Private equity does not have any impact or whatever on tax loss selling. So for the private equity fund, it's no issue.
So is there with private equity in this? Is there an opportunity here to see these depressed values on the publicly traded companies for a company like Plethora that's looking to do deals?
If we were looking for depressed asset prices, for sure, but that's not our model. We are generating our own projects on the private equity side. So if the model was acquiring this depressed assets, that will be the case. But that's not in our case.
So I guess with these valuations here, I mean, there's a lot of companies that at their current valuations, it's going to be difficult for them to raise money without being incredibly dilutive. The expectations, we get out of tax loss season, if that's even a thing this year. I'm a little bit skeptical because I feel like tax loss selling has just been happening, like I said, all year. The challenges of these companies to go out and raise money, would you be surprised that we see less precious metal junior equities in the next 6 months, that we will see some go to zero?
Well, looking at history, most companies are quite resilient and refuse to die.
For better or for worse. Eric, what do you think?
No, I don't think it's that bad that they have that problem. So I don't see that.
So where will the capital come from that needs to be raised? If you have 3,000 junior equities on the venture exchange or across the board, where's this money going to come from that they need?
It's going to be difficult if I look around, but I think retail needs to come back into the space to really have new successful equity issuances for most companies. And I can't see any retail activity right now in the sector, or much activity.
Would there be a catalyst or something that you think would trigger retail back in?
Most of the times it's rising commodity prices that does the trick.
Okay. Eric, do you have any?
I think we have one good thing playing for the miners as general, and that is in the old times there were only mining companies to invest in. But then came the gold ETCs and so on, and ETFs. And people in the old times wanted to invest in gold, but they only had the miners. So what we saw after the ETC and ETF creations, a lot of people that wanted just gold, they would start to buying the ETF and ETCs. And that pushed selling pressure on miners. And I think it has been now for maybe 10 years, and it's over. So anybody who wants to buy miners, they would buy miners now. And the people who want to buy gold ETFs or ETCs, they buy the ETF or ETCs. So I think we had to have a period of abnormal depressed prices for miners, and I think that's good for mining investors.
Are you concerned that those prices of miners could get worse if and when we do hit a actual recession? a real defined recession in 2023?
I think we will. Something will happen, of course, very soon with the rates so high and so fast. But the central banks, they won't turn before something breaks. But when it breaks, they will turn fast, and we will see a lot of liquidity from the central banks and from the states trying to save the situation. So I don't think we'll be in a long recession for a long time. And that, of course, will be good for gold and silver, and then for the miners.
Right.
I think we are already in a recession, and that has been, well, at least I hope, already fully priced in the junior exploration market currently.
You think it's fully priced in?
I think so, yeah.
The bottom's in?
Well, yes.
Wow. You heard it here first, folks. Again, if anybody has any questions, feel free to raise your hand with anything specific. You know, I was unfortunate to not be in this sector back in the last great in the great financial crisis, 2008, 2009. And maybe, Eric, maybe this is a good question. Maybe walk us back what we saw during that time, during these tax loss selling seasons. Is anything similar, anything different this go around that we're seeing now in the seasonality compared to what you saw 14 years ago?
Well, I mean, then it was not the seasonality, but it was the financial crisis. I mean, and that took gold down in the beginning as well. But I mean, it bounced back really fast, and then we had the very great returns for the gold and for the miners. So, I mean, when you have a big crash in the market, you will see gold go down as well with the normal equity market, because it's a liquidity crunch. So people start to sell gold as well. Price goes down and maybe the miners with them. But I mean, now we have had the equity market has been going down already, so that crash won't happen like that. So I think the sector is really interesting to invest in, and we have so high dividends, especially in the larger companies. So if we start to see capital rotation into commodities, commodity equity, I think that will be really good for the sector. So it looks much better now than then, and that was a good period.
Yeah. A few months ago, there was a lot of big narrative in the financial media regarding the comeback of value investing. You don't hear much of that anymore, but I do think it's still alive and true. But during that time of the value comeback, we did see the gold miners start getting nice bids, and then as policy continued to tighten, obviously the gold miners sold off here. But do you think that correlation of gold miners being the value trade, does that get a second round of a comeback here in 2023? And why would that be? Why the gold miners instead of maybe like the base metal miners, so like the big Freeports of the Valleys?
Well, I think what is interesting with the miners is that they really lowered their debt the last 10 years, since 2011 or 13. They have lowered the debt, and all other sectors have, raised more debt. So we have low debts in the companies, high dividends. They're much more share-only friendly than they were before. So it's a really strong, just looking at our ETF, our exchange traded fund, the dividend is over 3%. That's almost as much in a pure dividend ETF. So I think this setup is really good.
I completely agree. Nothing to add.
Okay. What about we always heard that in the last couple of years, money capital was taken away from gold and going into things like cryptocurrencies. We've seen obviously that play out well. What would be something that would continue to take capital away from gold? Would it be something like energy, fossil fuels? What would be its next biggest competitor?
Well, I'm sure Vancouver will invent something that will compete with gold. Carbon credits might be the play that could compete with the market. You might have cannabis making a comeback. I don't know what will be the main competitor for speculative capital at this particular point.
So when does speculative capital come back? I mean, that's really what we've been just missing for the last 12, 13 months.
I think it's also a generational question where the young generation is so obsessed with crypto and making money through their phone on an app that there is some kind of generational gap where people don't really understand the tremendous wealth creation that could happen with a mineral discovery. So there's some education that needs to be done on that front.
Side story that just made me think of this. A friend of mine, colleague, attended the Real Vision conference in Little Cayman last week. And obviously this was happening while the crypto contagion was kicking off. And my friend acknowledged that for the first time in a long time, a lot of these crypto bugs were starting to ask questions about macroeconomics. And so I told you this was the comedy session of the conference. But it is an education moment. You know, like nothing makes you a better investor or a better trader than losing a lot of money really quick. So maybe this is that moment where do we have a responsibility in this sector to be educators, not just stock promoters, but educators in the sector?
I think so, but on that front, you are already doing a great job. And it's also, people need to have the willingness to be educated anyways, to have some kind of interest in the sector intrinsically. And if that's not there, well, where do you start, right?
Yeah.
I actually think it's a good point because that's what we do. We really try to educate the people. I mean, we are based in Sweden, and we really educate and try to really get out the case for gold and silver and other metals because we invest in all metals. But so I think it's really, really important. But I think there is one thing that because you asked about the pressure on gold, it won't be really bad. But I mean, now Russia is a big producer of gold. And I think, they have to sell a little bit cheap to China, India, and that has put some pressure on gold. But that's a one-off. When that disappears, the market is there. I think, so that will be another positive. It has been a negative, but I think they have been having to sell some gold to the market to a lower price than maybe normal.
I'm glad you mentioned this because this is one of the questions I've been dying to maybe get an answer to. Hypothetically, as the world continues to split and deglobalize, would a new gold exchange between the likes of Russia and China be born on its own through this whole thing? Without the Western.
I think the deglobalization will be. It will make commodities more expensive. In a matter of different. One thing is that first of all we want to produce closer in Europe, and that will be more expensive commodities coming up because we don't want to be as dependent on China. We also see this competition. Russia, China, COMEX won't be able to push the prices the way they want. So I think, and I also see another trend, and that is maybe two-tier prices of gold. You see gold that has been mined in an ESG-friendly way, and gold that has not. So I think some things are happening, both on this US, China, Russia,
right.
The whole world, and ESG-friendly mining as well.
Graham, you had a question?
Yeah, as a retail investor, does it make any sense, given the state of the markets, to invest in a pre-discovery story? And what I mean by that is, obviously you can have the hockey stick if they actually make a discovery, but there's so many projects that are out there with, defined resources or that are in development, they're going to be building their mine, but they've just been beaten down so hard. From a risk-reward standpoint, is there any point to invest in pre-discovery when there's so much, it seems like there's so much low-lying fruit available with, ounces that are there?
It's a good question.
It's a good question, and I think you're entirely right. At this particular point, it makes more sense probably to buy into are real resources that make economic sense.
Yeah, for us, I mean, that's our concept. We want to invest in companies that actually have a profit and are already mining. So, but of course, we need the explorers one day to become a larger company. So, I mean, we're also happy that people invest in the explorers because some of them are the future for mining as well.
That probably a better question for Willem, who I think ducked out right before you asked that. He might give you a different answer.
Yeah.
I can tell you, me personally, with my portfolio, I've been adding to positions that have a resource, that have cash, and if need be, even if things are even worse than they are now, can get more cash. That's where I'm looking and where I'm deploying. I've been actively buying lately. That's just me. Anybody else have any questions? Any sort of specific, we try to wrap this up here, any sort of specific strategies here? Is it too late to be selling for tax loss? I mean, I know technically it's not, but things are so illiquid right now. Yeah. How much harm are you doing selling for tax loss?
Well, it depends if you want to buy back the same position. If that's the case, I wouldn't sell right now. But if it's a position that you're not happy with anyways, well, better sell.
Do you have any strategies here?
Well, of course, if you're going to buy back, if you are the seller and you want to buy back, I mean, you probably have to buy something that is not the same. It has to be different. I mean, to be out of the market, I think would be really risky. Because, I mean, gold and silver market, when it goes up really fast. So, I mean, you have to measure the price of if you're going to be out of the market or are going to invest in something similar but not in a tax way, same. So it's a difficult situation, I think, to do that.
Yes, sir.
I'm not sure what is the exact legal rule for the Canadian taxpayer in order to use that tax loss selling. Is it only to offset gains, or can you extend the gains and deduct the losses from your income?
Unfortunately, there's not a Canadian up here. I don't know the answer.
You can carry them forward, and it just offsets gains, so it doesn't go against your income.
Can you hear that?
You can carry it forward into the next year.
Yes.
I believe you can also carry them back 3 years as well.
3 years?
Yeah, I believe so.
Okay. We might have to reference that for anybody else have any questions? All right, gentlemen, thank you so much for your time. I know it's a hard conversation to have. In fact, I've had tax loss selling discussions for the last 4 years, and this has been the hardest one. It's just so challenging. But I appreciate your time and your insight, and obviously any follow-up questions, you can come chat with any of us. Thank you so much.
Thank you.
Thank you.